All right, so let's dive into something that might have some of you feeling a little uneasy. A
Yeah.
second Trump term.
Yeah.
And even if you're not, glued to the political scene, the reality is that presidential policies,
Mhm.
especially those impacting the economy, can send ripples through
Mhm.
everyone's lives.
Mhm.
And that includes millennials.
Yeah.
So today's mission is we're going to be sifting through advice from financial gurus, articles, even a millennial-focused podcast
Interesting.
to try to figure out how to navigate these potential financial shifts. What do you think?
Sounds like a plan. It's not just about abstract economic theories here. We're
Yeah.
talking about practical, real-world impacts on your wallet.
Exactly. And one thing that really caught my eye was this apparent contradiction. Millennials are supposedly optimistic about the economy,
Right.
but they're also grappling with financial insecurity at the same time.
Yeah.
How do those two things even coexist?
Well, it does seem a bit counterintuitive, doesn't it? But I think it actually speaks volumes about the unique challenges that millennials face.
Okay.
They are known for being adaptable, entrepreneurial,
Right.
the side hustle generation. But let's be honest, they're also dealing with student loan debt, sky-high housing costs, and a job market that's been, well, let's just say unpredictable.
Yeah.
So it really is this balancing act between, like, we got this,
Right.
and, uh-oh, how are we going to manage this?
Exactly. And that's where I think some of this advice that we've gathered starts to make a lot of sense.
Yeah.
For example, we came across Lisa Green-Lewis, a TurboTax expert,
Mm-hmm.
and she really hammered home the point of maximizing retirement savings before the inauguration,
Smart.
specifically highlighting 401k contributions and the potential tax benefits.
Yeah.
So even with all this uncertainty, the fundamentals of financial planning still hold true.
Absolutely. In fact, I think understanding those fundamentals becomes even more critical during times of potential economic shifts. Think about it this way. If we're looking at potential changes to tax policies under a second Trump administration, taking advantage of existing tax-advantaged accounts like 401k
Right.
before any potential policy shifts could be a really smart move.
Makes a lot of sense. It's about being proactive
Yeah.
and maximizing what's available now. So what else did these experts have to say?
Well, we also looked at Justin Peters, the host of the Struggle is Real podcast.
Okay.
And he's a big advocate for what's called the buy and hold approach with low-cost index funds. He even threw out a benchmark number, aiming for an expense ratio below 0.25%.
Okay, break that down for me a bit. What are index funds and why is this expense ratio so important?
Sure. Imagine trying to mirror the performance of, let's say, the entire stock market.
Oh, it's
It's
okay.
a lot to manage, right?
Yeah.
Index funds make this a lot simpler. Think of it like a basket of stocks that track a particular market index,
Okay.
like the S&P 500.
Yep.
And that expense ratio, that's simply the fee you pay for owning that fund. Now, the lower the expense ratio, the less of your returns are eaten up by fees over time.
I see.
For example, on a $10,000 investment, a 0.25% difference in fees could actually save you thousands of dollars over a decade.
Wow, I never realized those seemingly small percentages could add up so much over time.
It's crazy.
So choosing an index fund with a low expense ratio is kind of like setting yourself up for a more financially secure future.
Exactly. But remember, diversification is key here.
Okay.
And that's where Alex Blackwood, who's the CEO of Mogul Club,
Mm-hmm.
brings in a different perspective. He recommends exploring alternative assets like real estate
Okay.
as potential hedges against inflation and sources of passive income.
Okay. Alternative assets. Sounds intriguing,
Yeah.
but also a little bit risky. Help me understand this a bit more.
Sure. So think of it this way. Traditional investments like stocks and bonds,
Right.
those are great, but sometimes it's wise to venture outside those conventional avenues. Alternative assets can be anything from real estate to precious metals to even things like fine art.
Interesting.
They can offer diversification and potentially higher returns, but it's really crucial to understand the risks involved.
So it's not about jumping into the next trendy investment everyone's talking about. It's about doing your homework, understanding the market, and making sure it aligns with your risk tolerance.
Exactly. You hit the nail on the head. Now, this next point really highlights that millennial adaptability we were talking about earlier. Did you know that nearly half of millennials have side hustles,
Wow.
bringing in an average of over $12,000 a year?
Wait, seriously? That's like a whole extra paycheck every month.
Right.
Is that more about an entrepreneurial spirit, or is it about making ends meet in this current economic climate?
It's probably a mix of both, to be honest. What's interesting is how this side hustle mentality could be especially valuable if we're heading into a period of potential economic uncertainty.
Hmm.
Not only does it offer income diversification, but it also allows millennials to develop new skills, which could even lead to a whole new career path.
So it's a financial safety net, but also a chance to explore new opportunities and potentially pivot if things get shaky.
Yeah.
I like that. Okay, so we've talked about proactive moves like 401ks and index funds,
Hmm.
but also the potential of alternative assets and side hustles. Where do we go from here?
Well, let's shift gears a little bit and talk about some, for instance, someone might panic and sell off investments at a loss just because the market dips a little bit.
So how do we avoid falling into these emotional traps?
Right.
What do our financial experts have to say about that?
Well, Justin Peters, the podcast host we mentioned earlier, had a
Yep.
really interesting take on this. He talked about the importance of tuning out the noise,
Okay.
particularly the constant barrage of financial news and opinions we get from social media and other sources.
It's true. It's easy to get caught up in the hype
Oh, yeah.
and make rash decisions based on what you see trending online.
It's like trying to make investment decisions in the middle of a hurricane. It's just not a good environment for clear thinking. He emphasized sticking to your investment strategy and remembering why you chose that path in the first place.
That makes a lot of sense. If you've done your research, assessed your risk tolerance, and chosen a strategy that aligns with your goals, you don't need to react to every little market fluctuation.
Exactly. And this ties in nicely with something Lisa Green-Lewis, the TurboTax expert, stressed. Financial literacy.
Right.
She believes that understanding basic financial concepts is key to making sound decisions, regardless of the political climate.
Yeah. It's like having a financial toolbox. The more tools you have, the better equipped you are to handle any situation that comes your way.
Exactly. Knowing how taxes work, understanding the difference between an index fund and a mutual fund,
Right.
even just creating a budget. These are all essential financial tools that can empower you to make informed choices.
And that sense of empowerment can be a real game changer when it comes to managing those feelings of anxiety and uncertainty.
Absolutely.
Hmm.
When you feel knowledgeable and in control of your finances, you're less likely to make emotional decisions that could derail your long-term goals. Now, speaking of uncertainty, one thing that really stood out to me was Alex Blackwood's advice on not putting all your eggs in one basket.
He was referring to the importance of diversifying income streams, right?
Yes.
Especially in a potentially volatile job market.
Exactly. And this is where side hustles come back into play. Having multiple sources of income can act as a buffer if you experience job loss or a reduction in income. Plus, as we discussed earlier, it's a fantastic way to learn new skills and potentially even pivot to a completely different career if needed.
Yeah, it's like building a financial safety net while simultaneously expanding your skill set.
Oh,
Okay, we've talked about managing emotions, financial literacy, and diversification. What other practical advice did our sources offer?
well, Christopher Stroop from Silicon Beach Financial brought up a point that I think is crucial but often overlooked, especially when we're feeling anxious about the future: the importance of prioritizing essential needs.
It seems obvious, but when you're feeling uncertain about your finances, it can be tempting to make impulsive decisions or lose sight of what truly matters.
Exactly. He emphasized the need to take a step back and assess your spending habits. Ask yourself, what do I truly need to live a comfortable and secure life? What can I cut back on or eliminate? This ties into budgeting tools and automating savings, which can help take the emotion out of financial decision making.
It's like setting up a system that works for you, even when you're not feeling your most rational or level-headed.
Right. Remember that zero-based budgeting method we touched on earlier?
Yeah.
That can be incredibly helpful in this scenario.
Okay, remind me again how zero-based budgeting works.
So it's actually quite simple. You start with your income for the month,
Okay.
and then you allocate every dollar to a specific category.
Oh.
Essential needs like housing and food,
Right.
savings goals, and then any remaining funds can go towards wants or discretionary spending. The idea is that at the end of the month, your income minus your expenses should equal zero.
Okay.
Every dollar has a job.
Mm-hmm.
So it's about being intentional and mindful of where your money is going rather than just letting it slip through the cracks. Exactly. And this level of mindfulness can extend beyond just our finances. It's about how we consume information, how we react to external events, and ultimately how we approach our financial future.
I'm starting to see a pattern here. All this advice, from diversifying income to prioritizing needs to zero-based budgeting, It all points to one key theme: taking control.
Yeah.
It's about taking proactive steps to build a financial foundation that can withstand uncertainty.
That's a brilliant observation. It's not about trying to predict the future or time the market perfectly. It's about focusing on what you can control. Saving, investing wisely, managing your spending, and building resilience.
So in a way, preparing for a potential second Trump term isn't all that different from preparing for any other economic challenge. It's about being proactive, informed, and adaptable.
Exactly. And remember, financial planning is an ongoing process. It's not a one-time event.
Right.
You learn, you adapt, and you make adjustments along the way.
So where do we go from here? What are some concrete actions our listeners can take to put all this advice into practice?
Let's dive into some practical tips and resources that can help you get started, regardless of your current financial situation.
Perfect. Let's equip our listeners with the tools they need to navigate these potentially choppy financial waters.
All right, so we've talked about a lot of potential policy shifts, broader economic trends. Now let's try to translate all of this information into some actionable steps. I know it can feel a bit overwhelming, so let's break it down and make it manageable.
Yeah, I like that. A clear action plan. I think that would be great for our listeners. What's step one?
Step one, revisit that budget. And I'm not just talking about scribbling some numbers on a sticky note. Use a budgeting app, spreadsheet, whatever works best for you to really track your income and expenses.
Okay.
And think back to what we discussed about zero-based budget. And it's really about allocating every dollar intentionally.
Right. Like giving every dollar a purpose.
Exactly. And no more mystery money disappearing into the void.
I like that.
Once you have a really good grasp of your cash flow, you can start looking at those proactive financial moves that we talked about.
Right. Like Lisa Green-Lewis's advice about maximizing retirement contributions before any potential policy changes.
Precisely. Even if it's just a small increase to your 401k contributions, remember, time is your greatest ally when it comes to compound growth. And don't forget to check if your employer offers any matching contributions. It's essentially free money.
Yeah, free money. Who doesn't love that? Sign me up.
Okay.
So now for those who are, feeling a bit more adventurous and have done their research,
Yeah.
exploring those alternative assets that Alex Blackwood mentioned could be a worthwhile avenue.
It could.
But remember, due diligence is absolutely crucial here.
Absolutely.
So, resist the urge to jump to the latest investment trend just because everyone's talking about it, right?
Exactly. Do your research, understand the risks involved. And if you're unsure, consider talking to a financial advisor who can provide some personalized guidance. Now, shifting gears a bit, let's talk about that all-important mindset piece.
Okay.
How can we stay grounded and avoid those emotional financial decisions?
Yeah, that's a big one. It's easy to let emotions kind of drive our choices when it comes to finances, especially when things feel uncertain.
Absolutely. And that's where Justin Peters' advice about tuning out the noise becomes so important. Limit your exposure to sensationalized financial news.
Right.
Focus on your long-term goals. And remember, investing is a marathon, not a sprint.
It's like putting on those financial blinders and staying focused on your own lane.
Exactly. And don't underestimate the power of community.
Oh, yeah?
Talking to friends, family, or joining online forums about personal finance can provide support and accountability.
Right.
Sharing the journey can make it feel less daunting and, more fun.
Yeah, for sure. And as you said earlier, even small steps can lead to significant progress over time. It's not about being perfect. It's about making a consistent effort.
Absolutely. Couldn't have said it better myself. Now, before we wrap up this deep dive,
Okay.
I want to leave our listeners with one final thought.
Right.
Think back to everything we've discussed today. The strategies, the advice, the different perspectives. What one action feels most relevant or potentially impactful for you to take in the coming weeks?
I love that. That's a great question to ask.
Right. It's like a personalized call to action for each listener.
Exactly. It's about taking all this information and turning it into something tangible, something that can move you closer to your own personal financial goals.
Exactly.
So as you're listening to this and processing everything, ask yourself, what's my next step?
Yeah.
What's the one action I can take right now to feel more in control of my finances?
Because knowledge without action is just potential.
And on that note, we'll wrap up this deep dive into, how millennials can navigate the financial landscape of a potential second Trump term and all the challenges and opportunities that may lie ahead. Thanks for joining us.
It's been a pleasure sharing these insights with you. Here's to a brighter financial future for all. So we've covered a lot of ground here, from those potential policy shifts to broader economic trends. Now, let's see if we can, translate all this information into some actionable steps. I
Sure.
know it can feel a little overwhelming.
Yeah, it can.
So let's break it down, make it manageable.
Yeah, I like that.
First things first, revisit that budget. And I'm not talking about like scribbling some numbers on a sticky note. Use a budgeting app,
Right.
a spreadsheet, whatever works best for you to really get in there and track your income and expenses.
Okay.
Think back to what we discussed about zero-based budgeting.
Mm,
It's really about allocating every dollar intentionally.
right. No more mystery money.
Yeah.
Like
Yeah.
giving every dollar a purpose. I like that.
Exactly. Once you have a really good grasp of that cash flow, then you can start looking at those proactive financial moves that we talked about.
Okay. Like what Lisa Green Lewis said about, maximizing retirement contributions before any potential policy changes.
Precisely. Even if it's just a small increase to your 401k contributions,
Hmm.
remember, time is your greatest ally when it comes to compound growth. And don't forget to check if your employer offers any matching contributions. It's essentially free money.
Free money. Always good.
Exactly. Now, for those who are feeling a bit more adventurous and have done their research,
Yeah.
exploring those alternative assets that Alex Blackwood mentioned could be a worthwhile avenue.
Okay.
But remember, due diligence is absolutely crucial here.
Right. So resist that urge to just jump in because everybody on the internet's talking about it.
Exactly. Do your research, understand the risks involved, and if you're unsure, consider talking to a financial advisor who can provide some personalized guidance. Now, shifting gears a bit, let's talk about that all-important mindset piece.
Mm.
How can we stay grounded and avoid making, those emotional financial decisions, especially in times like these?
Yeah, because that can be really difficult, especially when things feel so uncertain.
Absolutely. This is where, Justin Peters' advice about tuning out the noise becomes so important. You know, limit your exposure to sensationalized financial news.
Right.
Focus on your long-term goals. And remember, investing is a marathon, not a sprint.
Right. It's like having those financial blinders on and just staying focused in your own lane.
Exactly. And don't underestimate the power of community. Talking to friends, family, or, joining online forums about personal finance can provide support and accountability.
Yeah,
Sharing that journey can make it a lot less daunting and, well, more fun.
it can, for sure. And like you said earlier, even small steps can lead to significant progress over time. It's not about being perfect. It's about making that consistent effort.
Couldn't have said it better myself. Now, before we wrap up this deep dive, I want to leave our listeners with one final thought. Think back to everything that we've discussed today. The strategies, the advice, the different perspectives. What one action feels most relevant or potentially impactful for you to take in the coming weeks?
Ooh, I like that. That's a really great question to ask yourself. Because it is about taking all this information and turning it into something tangible, something that can move you closer to your financial goals.
Exactly.
So as you're listening and processing, what's my next step? What's the one action I can take right now to feel more in control of my finances?
Because remember, knowledge without action is just potential.
Well, on that note, we'll wrap up this deep dive into how millennials can navigate the financial landscape of a potential second Trump term, all the challenges and opportunities that lie ahead. Thanks for joining us.
It's been a pleasure sharing these insights with you. And here's to a brighter financial future for all.